Leading central banks of the United States, the United Kingdom and Japan are due to announce their policy decisions this week. The Bank of Japan and the Bank of England are going to be momentous. Japan's regulator may present a surprise such as a further rate hike tomorrow. It will be a crucial decision in the context that the next policy meeting will be held during the elections for the leader of the ruling party in September, so policymakers may prefer not to wait for the policy meeting in October to prop up the catastrophically weak yen. Market participants do not expect any surprises from the Fed Reserve because the regulator will hardly begin its monetary easing before September. Besides, this Fed's decision has been already priced in by investors. Today, the U.S. regulator is opening its two-day policy meeting, which will be an interim and formal event. Interestingly, last week, the leading American mass media hinted at the possibility of a cut in the funds rate as early as July 31. However, this week market participants are anonymously speculating that the Fed Reserve is likely to keep the status quo. It's the reason for the confident growth of the US dollar. Its index opened on Tuesday within an intraday corridor of 104.50 to 104.80. Our analysts believe that the greenback's further rally could be limited. Analysts assume that tomorrow Jerome Powell will almost directly announce the possibility of a cut in the funds rate at the September meeting. Previously, the Fed chairman had never mentioned any specific timeline for the start of a monetary easing. Nevertheless, this prospect will restrain the US dollar from further growth. Today, market quotes of currency pairs and other assets will consolidate around their current levels. All in all, the future of interest rates in the US should become clear after Jerome Powell's press conference. The growth prospects of the US economy will be reflected in the quarterly reports of the US top companies. First of all, investors are mostly interested in the performance of the IT giants. Therefore, for now, Wall Street is trading quietly. The leading S&P 500 index is consolidating in a narrow range of 5,444 to 5,488 points. This week, markets are anticipating a series of major labor market reports in the US. Meanwhile, a potential drop in job openings and the labor turnover data for June could put pressure on the US dollar. The number of vacancies in the first months of the summer is expected to fall by 140,000. Troubles for the US dollar began in the first half of the trading day. The red-hot statistics showed the Eurozone GDP growth of 0.6% in the second quarter of this year. The previous figure was only 0.4% and forecasts expected half of a percentage increase, so the stronger than expected economic growth is bullish for the euro. Meanwhile, the euro-dollar pair clicked into gear and left a narrow trading range between 1.0815 and 1.0825, where it got stuck yesterday. Moreover, the bearish positions have strengthened so much that the euro even updated its local low of last week, coming close to the psychological support level of 1.2800. Eventually, the sellers were unable to settle the price at this level or lower. On the contrary, it was viewed by market participants as support. This, in turn, led to a gradual recovery of the single currency. As a result, today, the euro-dollar pair tested 1.2834 and maintained bullish momentum. However, the main catalyst for the euro will be the Eurozone inflation data for July, which will be published on Wednesday. We talk in detail about how economic statistics influence exchange rates in our traders' calendar, which is available the day before. For example, the inflation reports will provide clues about whether the ECB will cut the refinancing rate twice more this year. The Eurozone regulator began its policy easing cycle back in June and skipped July, but it might venture into the second rate cut at its next meeting on September 12. Notably, technical charts of gold and oil today are mostly highlighted in red. Moreover, crude oil is trading under escalating selling pressure. As a result, the Brent price has already dropped below $80 per barrel. According to our analysts, there is no doubt that the ongoing decline is speculative in nature. So it makes sense to wait for the publication of data on the US crude oil inventories, which will be available later today. The key catalysts will be tomorrow's reports from the Ministry of Energy, which will clear up sentiment in the oil market. Apparently, oil prices may begin a trend reversal in the next couple of days. In the meantime, during the downward cycle, Brent is trading in the range of $78.5 to $79.20 per barrel. From the point of a technical analysis, the asset is obviously oversold, which also sets the stage for a pullback. However, if we are dealing with the inertia, technical signals can be neglected by speculators. As for the top cryptocurrency, Bitcoin, it's a stronger catalyst than the speech by former US President Donald Trump. The crypto failed to surpass its record high level, indicating that it's entering consolidation in the short term. A possible monetary easing in the US could support the price of a Bitcoin and bring it up from the current range of $65,997 to $66,966. In the meantime, gold is trading moderately higher today, within the range of $2,421 to $2,437 per 3 ounce. The dollar-ruble pair is also trading in the green corridor today. The end of the tax period is accompanied by a considerable weakening of the Russian ruble. Therefore, the period from the strengthening of the ruble to 85 and the subsequent jump above 86 took less than an hour. Our analysts warn that the currency supply is going to decline further, and this factor is to blame for the further weakening of the Russian ruble. Most likely in the near future, the dollar-ruble pair may climb above 87 rubles per dollar. You have watched the Forex market review on the InstaForex TV channel. We wish you profitable trading and see you soon. While athletes at the Paris Olympics are looking forward to new records, the Seine River has already set its own in terms of pollution.